Hey, everybody. Welcome to week 61 of the Ag Commodity Corner Plus podcast. And today is the 5th of June, 2026. Mo, what are we talking about?
This week, we thought we'd focus on canola. Houston, we got a problem. We'll get into the story, plus screwworm in U.S. cattle. We'll give you our take on that as well. So let's get into it. Here's your summary, weekly closing quotes. And what a bloodbath. I don't understand what the funds are doing, but the only thing I can say is that they were too long. And they finally decided, literally, they've removed every risk premium on planet Earth. From weather to war to, I don't know, you name it, it's gone. And I don't know. I don't think it's over. I think we need to get to the June 11th USDA crop report. Unfortunately, we don't have any pre-report estimates yet. We'll have to wait till probably early next week. But you can see the red on the screen. But early in the week, soy and canola were at new contract highs, 79, 69 on soy, canola breaking 800. And that's why our story this week is about canola. We'll get into why it was doing that. Now, I wasn't able to hold on to those gains late in the week. But and then we had, of course, because of screwworm in U.S. cattle in Texas, you had feeder cattle move about 22 and a half points from the low to the high. And so cattle was the only, live cattle, feeder cattle were the only green on the screen. What's going on with Bitcoin? If anybody can explain to me that, that'd be great. Just send us your comments. But new closing low for the year, down 13,000 for the week. Gold, we warned about this, a break lower. It finally happened this week. Gold to new closing lows for 26, as well as silver. And then the U.S. dollar's breaking back above 100. We'll get into that, as well as the Canadian dollars breaking back below 72. So even though hogs have struggled, that lower Canadian dollar is helping the Canadian hog producer and also helping basis here in Canada. So let's get into it. Let's start off with this weather forecast for the Canadian prairies.
Yep, let's start with what's happening in canola country in Canada. So near term, the forecast is calling for waves of rain and storms through the end of the week and into next week. Producers have made significant progress in terms of planting in recent days, though the rain will slow or delay late season planting and general field work. The main production areas as of now have ample moisture. In terms of the seeding progress for the main three Western Canadian provinces, Alberta, as of this week, is 92% planted for the major crops, which is nearing the 5-year average of 97%. All three were running behind the 5-year average until now, even now as well. Seeding progress in Saskatchewan is reaching 80% versus the 10-year average of 92% and the 5-year average of 91%. Manitoba, 60% of Manitoba's canola is planted. Spring wheat is 88% complete.
So this map is showing you moisture through June 10th. And you can see up here in the prairies, not only did they get tons of rain here lately, but they're expected to get more rain on the weekend and into next week with crop insurance deadlines fast approaching. This is Alberta. They get some areas down here, right down here, 7 to 8 inches. Now, Abhinash just told you that Alberta's up to 92% planted, right?
Yep.
So farmers are concerned because they are flooded. So not only are these late rains this weekend, next week going to delay things, but they're also, any canola that was planted or crops in general that were planted are flooded out. So not only do you have unseeded potential canola acres, but you also have a percentage that will get flooded. They won't be able to replant. It's too late. As you get into that June 10th, you're on borrowed time. As you get to June 20th, guys will still do it. And the price of canola is pretty good, so there's an incentive to do it. But once you get past these insurance dates, you might as well take the $50 to $150 in crop insurance. And call it a day. They could plant maybe oats or barley. They don't like planting oats because it's a bulky crop. Maybe barley. But again, with canola, you're running into grade issues and potentially lower yields. So between maybe unseeded acres, 10%, maybe flooded acres of 5%, and this can be across the Canadian prairies in the southern regions. As you get further central north, I think you might run into issues with delayed unseeded acres and September frost. So I think this whole scenario, and that's one reason why canola was breaking 800, and you can see some of the insurance dates for each province. It varies on zones and all that fun stuff. But I think that's initially why canola was breaking 800. It did actually fall lower by the end of the week, but I don't think this story's over. I think the market is trying to figure out whether there is a problem or not. But from all the farmers we spoke to this week, it's at least 10%, as much as maybe 5% of already flooded planted canola acres. So you start throwing in a lower yield, and maybe we planted, Stats Canada said 21.8 million acres. And that was a December survey before Chinese tariffs were lifted. So let's assume it was 23 million. And many of the farmers are telling me they did not switch out of canola because of fertilizer cost. Look, I think you're going to get less wheat acres. Why? They tell me that wheat prices suck. So we got to $8, but we need double digits to make money. Our break even is around that 8 to 9, depending on cost. Whereas break even on canola is 10, and they're getting 17, $18. We had some clients get $800 here in Ontario. The basis is $0, so we got $800 if you had that hanging order in. So you're making a lot more money with canola. So maybe the higher fertilizer price didn't have an issue because canola was rallying.
Let's focus on that other major topic for this week's podcast. And we've been fearing this for quite a while, and finally it seems to have hit the U.S. cattle herd. A case of New World Screwworm was detected in La Prior in Texas, and this is the state's first case since 1966. The cattle industry had been fearing it for the last few months, ever since it was detected in Mexico. And there were restrictions on cattle movement, but it seems it's finally hit the U.S. cattle herd. And this comes at a very inopportune time, given that the U.S. cattle herd is at a 75-year low. USDA Ag Secretary Rollins said that they would be able to confine the outbreak within the state. Mo, big issue. What do you think?
You had one job and you failed. You couldn't keep it across the United States border. This border with Mexico is going to be closed forever. I'm really afraid this thing's going to spread. I know the politicians are telling you, calm down, we got it under control. But this is an infestation that could devastate the U.S. cattle herd that it's a 75-year low. This is very bullish cattle long term. So, that's why I'm surprised the market thought it was bearish. Maybe spooked the market a little bit initially, but long term, you get less supply, higher beef prices, period. And so you can see from this chart that we had this big spike today. Today and yesterday. So it's been about 2 days. If we can break above the April highs, we've had a target of 400. Maybe this is what takes feeder cattle up to 400 this year, but you break 400, you go into 432. So next target's about 387.
Let's talk currency and let's focus on the US and the Canadian dollar. So the US dollar is trading near, the index is trading near 100 as a resilient US labor market and sticky inflation reinforce expectations that the US Fed may maintain or raise interest rates. Additionally, persistent geopolitical tensions in the Middle East continue to drive safe haven demand for the US dollar. And
so, just before we go on to the Canadian dollar, we've traded par or 100 for some time now, since the start of 25. So I don't know if we can break above it in a big way. You can see the 200-day moving average well above that 102. So every time we get to par or 100, it's bearish the Canadian dollar, and we're retesting some of the lows.
For the Canadian dollar, that continues to trend lower as threats of U.S. tariff on Canadian exports at a time when CUSMA is being negotiated or renegotiated way heavily on the Canadian economic outlook. And the Canadian economy slid into a technical recession and prompting investors to seek safe havens in the greenback.
Yeah, so this recession is bearish the Canadian period. I don't know how to explain it any other way. I don't know what Carney is thinking, but when he says to the public that the reason why we're in a weak economy, he refused to call it a recession, is because we have less immigrants coming into the country. I'm sorry, but where are you getting this from? I just don't get it. Anyways, I'm not going to get political here, but look, there's a huge disconnect between him and his elites and the average Canadian. I would say the same thing with the United States. The average Canadian's suffering. So why would you want to increase rate? Why don't you stimulate the economy since it's so weak and maybe improve sentiment, maybe get the consumer to start spending some money so we can move this economy along? Don't forget, try our program. We got the app, we got our podcasts, we got our daily emails. This week, we were talking about 2027 fertilizer and what to do with it. So if you want to check that out, I think that's key. Again, what we try to do with our clients is we try to lock those inputs lower. So when we're selling corn and beans higher, we're having our cake and eat it too. I know it's not easy, but that's what we do. And we get it right 8-9 times out of 10. Try the program. What about Broadcom?
Well, the U.S. stock market is cratering. U.S. equities tumbled because of a violent sell-off from the easing in chip stocks. The tech-heavy NASDAQ lost 4% for its biggest decline since tariff turmoil of early 2025, and that 4% is just for today. The catalyst for the chip downturn this week is unclear, but a lot of the trade is pointing fingers at Broadcom, which had their earnings out this week, and it was Broadcom's failure to raise its AI chip outlook on Wednesday, which some blame for this downturn.
So I don't know if I'd call it a crater, but that's a little harsh. But anyways, look, we talked about Dell last week, and Dell reported server revenue up 757%, and so everything was going parabolic. We were partying like it was 1999 all over again, and then Broadcom came in. They had good numbers. You can see it on the screen. However, it wasn't a parabolic 757% growth. And so I think we had gone too far too fast. We had priced it all in. And this is Broadcom's chart. And you can see here from the low at 290 to almost 500, the stock was up a good, I forget how much it was, but it's just massive, and you can see the big gap lower, and it just wasn't enough to keep the stock going. So corrections are always healthy, but there is a nasty move here. This is the semiconductor index. It's down about 12.5% from the high. So we've had some 10, 13% hits across the board, whether it was Micron, SanDisk, Western Digital, AMD. I mean, I could go on and on and on. To me, this is a buying opportunity, but we are approaching the summer, and we sometimes tend to get into the summer doldrums. But remember, Micron reports on June 23rd. Maybe it could revive this trade, but we've seen this rotation before, and I'm really wondering whether the rotation is out of commodities and back into stocks, but now we're rotating out of tech stocks into other stocks, and they tend to go to some of the more valued stock that have done almost nothing, and it'll last for about a week or two or something like that, or maybe a couple days, and then they come right back to these AI stocks. So they're letting some air out of the bubble, but this is not over.
And let's talk trade. We touched upon the CUSMA negotiation / renegotiation. The US, Mexico, and Canada are expected to miss the July 1 deadline to renew USMCA or CUSMA, likely triggering extended negotiations over tariffs and trade rules, especially in autos. Officials now see ongoing rolling reviews rather than a full extension. The US is pursuing bilateral talks and side deals instead of formal renewal, keeping the pact in place but increasing uncertainty for nearly $2 trillion in annual trade.
Trump's back to the 51st state for Canada, and he has an issue with there's about 30 sticking points with Canada, but he has like 60 sticking points with Mexico. So we'll see. I think this one's going to drag out. It's going to be like a month-to-month situation, and it could linger till who knows when, until his term's up. Because I'm not sure about Mexico, but I know with Canada, Carney's gonna be a tough cookie to crack with some of these issues.
And the long-term weather forecast for the U.S. Looks like it's hot and dry for the U.S. Corn Belt. Near term, it seems to be warm and wet, but as you look longer term, it is not as warm and wet, or rather turns hot and dry.
It's funny because when I'm watching the meteorologists talk about this, it's funny because this was this morning, and I'm not going to mention names, but this was live, an update from the European model, and this is June, July, and September, and they were surprised as to the forecast because they were thinking with the super strong El Nino, we're going to get that cool, wet weather. Well, that's not what it's saying, and it's surprising them, and they don't know what's going to happen. And look at this. This is very warm and hot. This is July, August, September across North America. Now, if you go back to that previous chart, maybe some of Western Canada's a little wet, this part in the west and in the south. But that core of the Midwest is hot, dry, and warm. We'll see. It's too far out to give it any confidence. And then finally, CFTC.
Yep. So we had the CFTC, the latest update as of June 2nd. And as you guys can see, some red on the screen, especially for corn and soybeans. Significant selling in corn, off by about 90,000 contracts, over 90,000 contracts week on week, taking that net length to 115,082. Soybeans as well, over 33,500 contracts, taking net length to 156,050. And also more on Bitcoin. We broke below 60,000 today on the Bitcoin value. But in terms of CFTC, there was net buying for the week of June 2nd.
Okay, so you can see the funds were buying some canola. They did sell that SRW, but they're still long HRW. I got to think they're flat HRW by now. But they're really still long 156 soy oil and 127,000 soy meal. So when you look at the total based on this chart, yes, we've come off, but we're still relatively long. And that concerns me if we do not find a bottom. But I sort of smell, feel, and taste the bottom in wheat here. We were looking, we haven't been sliding as much the last couple of days. So again, I think as we get into that June 11th USDA crop report next week, what does the USDA do with that corn export program that's still red hot? And what do they do with this trade deal? Do they start to factor it in? Do they factor in the 17 billion US ag with China? Do they factor in the 25 million metric tons of beans? We'll find out. And then, of course, we'll find out what happens with the June 30th report. Until next time, thanks for watching. Have a great weekend. Be good.
Bye, guys.